This is a particular honor for me. I'm not going to make it about me. I'll eventually make it about the Lundins, but you give a broker like me a microphone in front of a target-rich audience like you, and you just can't pass up hogging the mic for a while. I've done business with the Lundins since 1974 at the rich old age of 21. Adam here is the third generation of Lundins who has conspired to make me look smart against all the evidence to the contrary. The relationship has been great for me, and it's in a small way been great for the Lundin family. Those of you who never had the opportunity to meet or invest with Adolf Lundin, now deceased, rest in peace, missed a wonderful opportunity. But Adolf has always built great companies and great families. When Adolf went away, he left Adam and Lucas, two who combined made the whole. And now there's a third generation of Lundin around to take advantage of. The Lundin legacy in Vancouver has been a spectacular legacy. Many of you don't know, as an example, Gold Corp, which came from partly Glamis, which came from Lundin in 1975. Many, many, many companies, many fortunes in the resource business from one family. I could tell you stories about the Lundin family for the rest of time, and probably would do it had I been wise enough to blackmail Adam at the beginning of the presentation. But I won't do that. What I will say is that you make money in the resource business by doing a few things. One of which is that you make money by backing great people who are serially successful people. Somebody at this table will tell me how many successful efforts the Lundin family has had, but I suspect it's over a dozen in both the mining and the oil and gas business. Companies that were started from scratch to exploit ideas that either the Lundins or Lundin loyalists originated, that were sold to the market for hundreds of millions or sometimes billions of dollars. The Lundins have also believed over time that they should hire the best of the best to assist them and support them absolutely vigorously. One lovely thing about a Lundin company is that from the Lundins' point of view, if they only hold 20% of a company, they're poorly positioned. They eat their own cooking. They eat their own cooking for two reasons. One, because it's the right thing to do, but more importantly, over 40 years, because it tastes very, very good. And when I say serially successful, many people here in the mining business haven't followed the efforts of the Lundin family in the oil and gas business in Norway. And I'm sure Adolf is wherever he is laughing about discovering 2 billion barrels out from under North Kedro, given the history he had there. Pardon? 2.7. 2.7, thank you. So if you think about a serially successful family, you think about the Lundins. If you think about two investing in natural resources when they're out of favor, that is being contrarians, the Lundins have always done that. The Lundins have always built their companies in lean times and monetized them in good times. And the Lundins have been contrarian in other ways too. The Lundins have gone into commodities or places where nobody else would venture to go. If you think about the record of Lundin successes, you think about really joyful, pleasant places, say Syria, Sudan, Congo, in its time, Argentina, but places that were decidedly off the map for most investors, which is why most investors lost money and the Lundins became brilliant. So I have the wonderful job today of introducing you to, in effect, the third generation of opportunities put in front of you by the Lundin family. I'd like to introduce first an old friend, literally and figuratively, Ron Hochstein. It's almost the same vintage as me, but we've also known each other for many years. Lundin, having run the family's uranium business, now runs an amazingly successful gold company called Lundin Gold. Ron?
Thanks, Rick. One of the countries you didn't mention was Ecuador, and I'll be very quick here because obviously I want to share the podium with my compatriots Adam, Jamie, and David. I will be making some forward-looking statements. But Lundin Gold is a company that, as Rick said, the Lundins are willing to go into countries that many aren't. We acquired the project Fruta del Norte in December of 2014 for $240 million from Kinross. This was a project that was originally discovered in 2006 by Aurelian, acquired by Kinross for $1.2 billion in 2008. Spent about $275 million on it, ran into some issues with the government, and we stepped in and bought it for $240 million. And I'm really happy to say, in December of, or fourth quarter, actually November of last year, we produced our first gold from Fruta del Norte. So in 5 short years, we've taken it from essentially acquisition through feasibility, raised over $1 billion in capital, and have put it into production. We're ramping up now to Q2, commercial production. And one of the other key things about Adolf, and I think you'll say, Rick, is that Adolf understood and practiced ESG before any of us today knew what those 3 letters meant. And that was one of the big successes for us in Ecuador, is working with the communities, being involved, and being committed to the country. This is the quick ore body here. It's about, our current reserves are about 5 million ounces at an average grade of 8.6 grams per ton, which just puts us up there in one of the largest, highest grade deposits in the world today. As I mentioned in November, we actually produced first gold. We produced gold as both as concentrate and as doré. And again, this was and we were able to do this on schedule and on budget. Our current life of mine plan shows we'll produce about 325,000 ounces per year. We'll ramp up this year from producing just under 20,000 ounces in 2019 to producing just over 300,000 ounces this year. And then over the life of mine, the current mine life, about 14 years, which I'm convinced we will be able to expand that through not only the resources that we have in Fruta del Norte, but going further abroad in the large land package. Our life of mine costs are $621 an ounce. This puts us in the lower quartile. Obviously in 2020, our costs will be a little higher as we ramp up. But this will be a great mine, and you can just see at $1,500 gold what our free cash flow looks like per year. I want to show now a quick video, gives you an idea of the terrain we had and what we've accomplished in 4 short years. So this was all done in a country that's never had a mine before, other than artisanal and small-scale miners. We're located right in the southeast corner of Ecuador. You can see from that the topography. We had 3.5 meters of rainfall a year. And we had a great construction team led by a fellow by the name of Louis Gignac and his son Matt. And Louis said this was the toughest mine he's ever built. So a real credit to the team, the G Mining team and everything in doing this. What we're doing though is not only trying to make money for our shareholders, we're changing a country. This province only had sustainable agriculture and it was one of the poorest provinces in the country of Ecuador. And through mining, they are starting to realize what can be done. We focused on community investment, not building schools, hospitals, that's up to the government. Working with the community to identify projects that they want to see happen, that they can be part of. Local employment. We were peaked at 4,000 people. We were hiring about 25% of the people. And remember, this is all they had before was sustainable farming. So there was a lot of training and everything we had to do as well. We focused on local procurement, buying from local suppliers as much as we could. This entailed training them on how to do their taxes, how to make sure they're paying all their employees properly and everything. And we were spending $2.4 million a month for local suppliers. And this was in an economy of 60 million GDP prior to us being there. And finally, ongoing dialogue, transparency. And these are things that we see amongst the Lundin Group of companies. And I talked about changing a country. This is the Vice President of Ecuador on our inauguration event in his quote, that what we're done is make their country proud, and we are the light that guides the mining development in this country going forward. As I said to the Vice President after he said that, no pressure. Not only is Fruta del Norte a great project though too, we also acquired a very large land package as part of the acquisition. And we have some drill prospects that are ready to go. We're very lucky we have the same exploration team that found Fruta del Norte in 2006 working with us. And we're just waiting for our permits to get that going. We have a strong shareholder base. The family owns 27%. Newcrest is another major shareholder at 32%. And several Canadian funds. And if you look at why you want to own Lundin Gold shares, it's because free cash flow as we bring this into production. We will be generating, if you look at terms of market cap, a significant yield relative to our peers. And finally, in closing, how we do this through responsible mining. We're ramping up to commercial. Our mine development, which is sometimes where people stumble, is actually ahead of plan. This ore body has been much better than what anyone thought it would be. We got the exploration upside and strong community support. The four factors, I think, that will make a successful future for Lundin Gold. And on that note, I'll turn it back to you, Rick. Thank you.
Think about it. Do your balance sheet a favor. Think about it. Second speaker, great last name for a Lundin presentation, Adam Lundin.
Thank you for the introduction, Rick. It's great to be back at the VRIC, and I'm excited to be here to present Josemaria Resources. It's not easy going after Ron. Lundin Gold is in phenomenal shape, and it's been an absolute joy following the progress. Ron joined the board of Josemaria the same time I signed on as CEO in September of 2019. I kind of feel like where Ron was about 5 years ago. Hopefully we can stay on that trajectory of value creation. I think Ron's share price has tripled in the last 5 years, so hopefully I'll be able to do the same. It's been a hot start to the year for Josemaria. We just had a site visit last week where we hosted 30+ individuals. The progress of the feasibility study is going well. I'll touch on that in more detail in the coming slides. Last week, I was also able to meet with the governor of San Juan, the newly appointed mine minister of Argentina, who also happens to be the previous mine minister of San Juan, the production minister to whom the mine minister reports to, and the president of Argentina. I believe working together with the current government of Argentina will be successful and able to bring this large porphyry into production. The Lundin Group is a familiar face in Argentina, as we've been active in the country for close to 30 years. Here's a quick corporate snapshot. Josemaria is listed on the TSX and we have a secondary listing in Sweden as well. We're trading around 80 cents a share, support a market cap of 200 million. The Lundin family, again, is the biggest shareholder with a 36% stake. What's changed from about a year or 2 years ago is our family's ownership has gone up from 21% to 36%, and as long as we still feel the company's undervalued, you'll see this ownership continue to increase. The project is located entirely in San Juan, and we have 100% interest in the project. We're very happy and comfortable being in San Juan. This is a mining province that hosts the Valadero mine being operated by VRIC. Valadero was a discovery made by the Lundin Group in the 90s. As you can see in this map, we are surrounded by some big operations, mainly Chilean operations other than Valadero. You have Lundin Mining's Candelaria mine, 100 kilometers northwest from us. Big mines require a lot of power, skilled labor, and water. A big benefit of being in Argentina is being allowed to access groundwater. Unlike in Chile, where you're required to build a desalination plant, which will add hundreds, if not $1 billion, to your capex. Also, with not many mining activities moving forward in Argentina, we find the permitting timelines a lot less. This is a quick slide on our proven or our probable reserves. We have 1 billion tons, over 1 billion tons, which consists of 6.5 billion pounds of copper, 6.5 million ounces of gold, and 29 million ounces of silver. What's very beneficial about this is the plant and all the operations are going to be downhill from the open pit, so we can use the topography in our favor. Here's our pre-feasibility study, which came out in November 2018. We're encouraged by the results. After-tax MPV came out to $2 billion US. We have an IRR of 18.7%. Our mine life is 20 years, and our average annual production over those 20 years will be 125,000 tons of copper, 230,000 ounces of gold, and 790,000 ounces of silver. I don't expect those production figures to vary much from the PFS to FS. It's going to be a big operation. Our average daily throughput will be 150,000 tons per day. It's an absolute honor to have the board I do. You'll see some recognizable faces. Starting with the chairman of Josemaria Resources is Ashley Heppenstall. Rick touched on Lundin Petroleum in the introduction, but Lundin Petroleum is now the largest independent European oil company today. It boasts a market cap of north of $10 billion US. Ashley ran that company for 14 years and did a remarkable job. It's great to have him as chairman and someone I can lean on. Also Ron, who I mentioned earlier, my brother Jack, who has been at Fruta del Norte for the last 3 years, and my father Lucas, who ventured down to Argentina in the early 1990s. Wojtek Wodzinski, who discovered Josemaria, Tina Petrush, who leads the environmental social governance efforts for Lundin Petroleum and also sits on the Lundin Foundation's board, and probably the best for last, Mr. Paul Conabert, who helped turn Lundin Mining into the best mid-tier base metal producer, which is still performing tremendously today. At the corporate level, I'm surrounded by some serious talent as well. Ian Gibbs, our CFO, recently moved over from the oil side and is also on the board of Lundin Gold. Our country manager, Alfredo Vitager, who's been with the group for 27 years. Alfredo started on the exploration team that found Valadero. We also recently signed on Arndt Bretschneider, who's leading the feasibility study, who came from a global engineering firm and has also worked on some seriously big projects like Antamina. We currently have 240 people at site conducting the key field programs in order for us to complete our feasibility study by Q3 of this year. This includes reserve definition drilling, geotech drilling, condemnation drilling, further water tests, baseline studies, and regional infrastructure and logistics surveys. This is the slide I'm going to end on. Since by the time we get in production, by 25, 26, we'll be coming into a very bullish copper market, and we're very excited to move this project forward and have it come online then. Thank you very much.
I hope everybody sees a common theme here. The Lundins find big deposits, they hire great people, they persevere through good markets and bad, and they turn them, like they have with Lundin Gold, into successes. Jamie Beck, who is running Filo mining, another Lundin venture in Argentina.
Thanks, Rick. And, Adam mentioned Wojtek Wadzicki. So Filo Mining and Josemaria were both part of the Lundin's commitment to Argentina. And it was actually when Tenke Mining was struggling through some periods of civil war that they needed a bit of news. And they continued to invest in Argentina and pick up this property when it was a period of, I guess, down news time for Tenke. And all of these projects, Filo Mining, Josemaria, and NGX, are really a result of the family's commitment to Argentina during that time. So Filo del Sol, I'll be making a few cautionary forward-looking statements. I encourage you to look at our website to read this in general. Filo Mining Corp holds the Filo del Sol project. Filo del Sol is a copper, gold, silver deposit which sits right on the border between San Juan province in Argentina and in Region 3 in Chile. We have a current resource of 4.4 million ounces of gold, 147 million ounces of silver, and over 3 billion pounds of copper. As with many of the Lundin companies, you'll see that the family has a big percentage ownership, and Rick alluded to this. The Lundin family has over 36% in Filo as well, and the company trades in both Canada and the TSXV, as well as secondary listing in Stockholm. The project sits very close to Josemaria. We're actually about 15 kilometers away as the crow flies. We are part of the Binational Treaty Protocol, which facilitates development of cross-border projects. In 2019, in January, about a year ago, we completed a pre-feasibility study on the project, and I'll get into the details of that in a minute. And also last year, continuing to this year, we've kicked off a very aggressive exploration campaign over 10,000 meters, which is the most aggressive drilling campaign that we've ever run at the project to date. One of the things that's really interesting about Filo and about the pre-feasibility study is that we have an economic resource of both copper, gold, and silver. So, sort of roughly the revenue breakdown here is 50% copper and 50% on the precious metal side. Our pre-feasibility study, which looked at a heap leach operation, sequentially leaching, so we would start off with leaching for the copper first, and then we would rinse and neutralize the material, carry it over to a permanent pad, and leach for the gold and silver. For approximately $1.3 billion in CapEx, we have a $1.3 billion NPV, over a 23% IRR, and the project's going to produce almost 70,000 tons of copper, 150,000 ounces of gold, and over 8.5 million ounces of silver over the 13-year mine life. So it's a really robust project. We were super excited with the result. But what makes Filo even more enticing is that sitting underneath this oxide portion of the deposit, we always knew that there was likely to be a larger prize. And we had indications early on in some of the drilling that we were onto a bigger sulfide deposit, and the board gave us the mandate starting last year to put the engineering work on hold and really try and define what we were sitting on at Filo. It's a huge area of mineralization. The strike length at Filo that we're looking at is over 5 kilometers in a north-south direction and over 1 kilometer east to west. And it's been really challenging and difficult to explore such a big area. But last season, we went back to exploration, and we started to put in some of the first deeper drill holes into the project. So as I mentioned, our target this year is to drill about 10,000 meters, depending on our drill productivity. We've got a couple of key areas where we're going to explore. To the northwest of the deposit, or northeast of the deposit, we're going to be drilling deep underneath our existing oxide resource into the sulfides. And to the southwest, we're going to focus on trying to find some additional oxide mineralization that's shallow and near surface. We had some early results come out in January, and the results looked really encouraging. This is just a picture of the open pit shape that's modeled in gray. Again, that's the oxide portion of the resource. What we're looking for now is what sits underneath. The first 2 holes announced this year are partial holes, so these holes are continuing to go. And what really got us excited about these were sort of the grades that we were hitting right at the bottom of this pit. So hole 32 you see here, it's at a depth of about 550 meters. And the last 80 meters of that hole was hitting 0.8% copper, 0.8 gold, and a significant amount of silver. Hole 33 is also highlighted there. Again, right at the bottom of the known resource. We're continuing to drill this hole with the target of trying to get these holes down to over 1,000 meters. So here we were hitting almost 1.1% copper. Again, significant gold, 0.6, and 22 grams silver. So these are significant copper, gold, and silver intercepts that we have a feeling we've got a really good chance of carrying this onwards. Last season, you can see right in the middle of that page, there's a drill hole trace of hole 25, which was the first deep hole that we put into the project, and we had continuous mineralization over a kilometer. That hole went down from surface to 1,025 meters below, and we were mineralized the whole way. Moderate grades, but what we're seeing in the bottom of the holes that we were drilling this year is that those grades are increasing as we move to the north. So it's a really exciting exploration season we've got planned at Filo. We have 4 drills turning on site, with a 5th that's supposed to be starting this week. And we should have fairly consistent news flow over the first quarter of this year, with assays trickling into the second quarter. So we're pretty excited about what the future at Filo might hold. Similar board of directors, as you will have noticed from Adam's presentation, and that's really one of the beauties of the group, is that we have the ability to rely on the expertise and the people that have been in this business and have been successful at making mines and making people a lot of money in the past. So we're very lucky to be able to rely on such a strong board of directors at Filo. Thanks.
This is just an amazingly easy job. I get to introduce great speaker after great speaker, great project after great project. And when I'm done with all of this, you all are going to applaud me and I get to have a beer. I can't imagine a better assignment for myself. So the next one is sort of a trifecta. Commodity that everybody except for me hates, uranium. So it ticks that box. I'm unpopular. A company that in the last uranium bull market made me something like 20 to 1. I mean, just a stupid amount of money, with unusually for the Lundins, a full warrant. Remember that, please, David. And then, of course, the Lundin family behind it. Last, by no means last, but by no means least, my good friend David Cates and Denison Mines.
All right. Well, thanks very much. Look, to be quite honest, it's my honor to be up here presenting with these great companies. No pressure, as Ron said earlier, but interesting thing here is that, of course, Ron, a mentor of mine and former CEO of Denison, following our progress very closely as one of our board members. And I'm actually quite pleased to be able to present to this group about the Lundin family's uranium investment, and that's Denison Mines. There are similarities, of course, that Rick's talked about with the companies. One could argue that being invested in uranium is the risky part of being invested in Denison, and maybe that's the part that ties into the Lundin Group. But really, for me, I think the tie-in is a commitment to building things that end up being top tier and finding jurisdictions where assets are truly premier. And so with Denison, the company's transformed over the last several years, but we are focused on building a top-tier uranium mine in a premier jurisdiction for uranium mining, and that's the Athabasca Basin. And so on the screen here, you'll see a photo of the haul road that connects the McArthur River mine to the Key Lake Mill, and that's on the eastern edge of our flagship property, Wheeler River. So no doubt, I will be making some forward-looking statements, and of course you are encouraged to check our website for these careful words. But before I get into the project, I do want to touch, and Rick will love this, just on the uranium sector, because it is very much a niche commodity, and it's definitely unloved right now. But I would say that you can't lose faith in this commodity. There are some very positive trends in the uranium space that people are not paying attention to because the price itself has been flatlined. And I'm not going to go through all of these trends, but I do really want to reassure everyone that the fundamental picture for uranium is actually improving day by day. And really it is an uncertainty that's been created by a trade dispute or trade petition in the United States that has left a market in a very much paralyzed state. And with that, you have the buyers and the actual participants in the market not transacting. And it's very difficult to discover a true price for uranium. But when that uncertainty around the 232 petition and the Nuclear Fuel Working Group is resolved, I really do believe that these fundamental stories underpinning the market will lead to a rising price. Now, with that said, our portfolio has been built to not necessarily rely on that rising price. And this slide is Denison in one page. Our flagship asset is a 90% interest in the Wheeler River project. This is the largest undeveloped uranium project in the eastern Athabasca Basin amongst all the existing uranium mines in northern Saskatchewan. We have initiated the environmental assessment, and we are moving this project forward towards a definitive development decision. I'll talk to you about why we're doing that despite the uranium price in the next few slides. On top of that, we have a physical asset that exists where we have a cornerstone or strategic interest, 22.5% interest in the McLean Lake Mill. This is the only operating uranium processing plant in the Athabasca Basin right now. It physically exists, it's licensed, it's operating a toll milling agreement with the Cigar Lake mine. On top of it, we have other assets. We have other unmined uranium deposits in the basin, and we have a very large exploration portfolio. So it really is a diverse asset base, but focused in the Athabasca. So we're going to spend most of the rest of this presentation here talking about Wheeler River, and I just want to orient everyone where we are in the Athabasca Basin. So Wheeler River is in that southeast corner of the basin, again located right between the McArthur River Mine and the Key Lake Mill, which together are actually the largest uranium mining operation in the world. Now, Wheeler River, in one slide, is a story of two high-grade uranium deposits. We have a 43-101 pre-feasibility on this project, completed in late 2018. Two different mining methods for two different deposits. The headline from this PFS was no doubt our selection of the very low-cost, in-situ recovery mining method for our very high-grade Phoenix deposit. ISR mining is the number one mining method for uranium at present. It represents over half of the world's uranium production, and it is the lowest cost form of mining for uranium. Phoenix is the highest grade undeveloped uranium deposit in the world. So you can imagine taking the very highest grade deposit and combining it with a very low cost mining method is something that could be quite powerful. And it truly was. We generated estimated operating costs of $3.33 a pound U3O8 US. That has the potential to be the lowest in the industry, lower than Kazakhstan, lower than even the largest scale conventional underground operations. If we load in all of the capital costs, initial capital costs, sustaining capital costs, and we add in those operating costs and we add in closure, and we divide those costs by the total number of pounds we'll produce, we get a fully loaded all-in cost of under $9 US. Today, the uranium price is just under $25 US. That's a decade low price, and yet we have a very healthy margin on an all-in basis. And that's why we've made the decision to move Phoenix forward. Now, the project is supplemented by Griffin, which is a conventional underground mining operation. Very good operating costs, under $12 US, but definitely has to bear the cost of capital associated with sinking a shaft. And so you do see the all-in costs on Griffin increase up to around $23 US. All of this gets started with initial capital at Phoenix in the range of about $325 million Canadian. If we take those two deposits and plot them on a cost curve in our industry, you'll see that we have a very good 1-2 punch between these deposits. Phoenix has the potential to be the lowest cost asset for uranium production in the world, competing with even the largest scale and lowest cost assets in Kazakhstan. And Griffin competes very favorably with other large scale underground mines. And so the idea here is that we can justify moving Phoenix forward today, and we can use Griffin to add leverage to the commodity price and increase our production tomorrow. And so that's why our production profile looks like this. A staged, rational approach. This is based on our view of the uranium market. This is not a NPV maximizing or promotional plan. Phoenix can move ahead. We have a reasonable upfront capex on that. We can make a very healthy margin even without the uranium price rising, and we can do it without signing contracts at the bottom of the uranium market. We can use those uncommitted pounds to sell the long-term contracts that we'd want to get for the Griffin deposit so that we can bring on that second source of production in the mid-2030s, frankly, when the uranium market needs it. If we wanted a higher NPV on the project, I mean, we could do that, and we would move all of that Griffin production forward and have everything start right away in 2024. The reality is that's a risky proposition, and it's not really commercially reasonable. Phoenix is 6 million pounds a year. The uranium market can take that, and we can make a good return on that. And we like the idea of using Griffin as leverage to an improving market. Right now, we're in the environmental assessment phase with Phoenix, so that is the long lead on permitting for the project. We are looking to be complete that process in the next 2 to 3 years. Then we would be looking at kicking off construction, and with the view of having our first production in the mid-2020s. Now, I talked about the commercial approach to that plan. This is a good summary slide in my last slide on the economics of the project. Our pricing assumptions in the PFS, they are a little bit complicated. We have not used one price and rolled it out for the whole operation. We really have tried to understand the market. And so for Phoenix, we've actually used UxC, which is an advisory firm or price reporter in the uranium space, their price deck for the space. It's their composite midpoint scenario. It's a third-party price deck. They actually have us selling our first pounds at $29.48 US per pound. I challenge you to find another uranium developer or producer, frankly, that uses a price deck that has $29.48 in its first year of production. You won't find it. We can do it because of Phoenix's cost profile. Okay, we give up NPV to do that, but the point is to prove that the asset can be developed today and that it's a reasonable thing to do to take our capital and raise money from investors and spend it developing that asset today in this market. Again, for Griffin, where we see it being more apt for contract cover, we've used a fixed $50 price deck. That's our base case. That's your $1.3 billion NPV. Okay? Obviously, in a high case, uranium price goes higher. We've got that leverage because we've actually advanced the asset now to a point where we are producing when the price is rising, rather than just being an exploration story with leverage to the commodity. I want to leave just with a photo here, and I'm on my last 30 seconds. But the ISR mining in the Athabasca Basin is a very exciting thing. This would be the first ISR mine in the Athabasca Basin, and it's something that we're truly committed to delivering. And we have spent 2019 in the field for months running field tests to address our number one technical risk around permeability of our ore body. We've drilled many wells, and you can see from this the activity in the field where we are trying to understand at a feasibility study level the hydrogeology in our deposit so that we can carry out mine planning for this feasibility study. And what I can say is that the results have only impressed us. We have been just extremely pleased with the results from this fieldwork, and our conviction around bringing ISR mining to the Athabasca Basin has only increased. And so 2020 and beyond is really an exciting proposition for us to take that super low-cost mining method and pair it up with that very high-grade deposit and truly transform uranium mining in the Athabasca Basin. With that, thanks very much. Appreciate it.
Well, I both hope and trust that this presentation has been worth your while. I want to say from my own personal point of view that the 40-year relationship with the Lundin family has been very much worth my while. I'm delighted to say, or to restate the fact that I came into the business myself with a wonderful mentor named Adolf Lundin, and occasionally I'm able in return to mentor the third generation of Lundin with Adam Lundin. This has been a family that has been just amazingly serially successful and has never quit. World-scale projects, as they said, involved in ESG long before the rest of the world understood the importance of those words. The Lundin family was able to get along with people in Papua New Guinea, in Syria, in Sudan, in Congo, in Argentina, in Ecuador. This isn't a slogan for these guys. They deliver first-class deposits with first-class people. They have low cost of capital, among other reasons, because they're very big owners of their own companies. If it sounds like I'm encouraging you to stay after and get to meet these people, have a beer with them, it's because I can and because I am. I have to go off to another appointment, but these guys are stuck here with you, and you should take advantage of it. Ladies and gentlemen, a great round of applause for these presenters in the Lundin family.